Has King Dollar been dethroned? Is it now the court jester? Perhaps it's time for you to consider leaving more of your asset money in South Africa rather than sending it abroad. Joining us today is Head of Asset Allocation at Corion Capital, Simon de Plooy, where we'll be discussing markets, especially these crazy movements on the currency markets. Simon de Plooy, welcome to the studio. It's so good to have you. We've had you on the screen, but it's great to have you here in person. Welcome to State of the Nation Business Live.
Mike, thank you so much. It's good to be here.
Yeah, now this week we're going to be focusing on, but not only, is around the dollar and certain parts of the US economy, which have been quite strange, but sort of manifests in the movement of the dollar. And just let's sketch the background. The thing is that we're now into the swing of Trumponomics, I suppose one would call it, with tariffs and a whole lot of strange way of using trade as a weapon almost. And the best scorecard one keeps is around the dollar. And you prepared the presentation of from King Dollar to the court jester, right? You want to just explain what you...
Well, we asked that question because the dollar has been so dominant in terms of its performance versus other hard currencies for the large part of the past 10 years. And this year it's not been doing well. And, that is quite unusual. So if you take a step back, the dollar is so important in terms of global trade. It's a large percentage of foreign reserves. It's a large percentage of FX transactions, and in terms of financial assets, companies, about 65% or 66% of the world index consists of American companies or US dollar denominated companies in terms of their share prices. So the prominence and the importance of the dollar is really undisputed. It is the global reserve currency, and it has been since the Second World War. As a result, it has become the safe haven asset. Whenever there's turmoil around the world, whenever things are up in the air and we're not quite sure what happens, you would normally expect the dollar to strengthen. And yet this year is an exception. The dollar has weakened against a number of major currencies.
I mean, like basically if you're a president and you want to do a dodgy deal, you put dollars in your couch. That's always the giveaway, right? That, what currency you're stuffing into your couch. And this year, maybe if he does another sale of imaginary assets, he'll put rand in his couch. You never know. That's why it's gone for reupholstering. But that's more the other side of the show where we talk about politics, but these things do collide.
Yeah.
Now, let's just have a look at just how important the dollar has been. You said it's been the global reserve currency, and it's had this dominant position since the Second World War. But I think we really need to stress just how central the dollar is to the world system, right? And we can see it in the graph that we're putting up where, as a percentage of foreign exchange transactions, 88% of world forex transactions.
Yeah, no, it is usually the counterpart to any FX transaction. For example, if South African want to buy a very exotic currency, you would typically first convert into dollars. And once you've got the dollars, then you can convert into the other currency. You can't exchange necessarily or easily rands for an exotic currency, but you can always exchange it for dollars. And somebody else will exchange their dollars for whatever you're looking for. So it just becomes the conduit. Also, it's quite interesting, whenever you're dealing in dollars, that transaction will go through a US bank, invariably. So it just touches the US for a second, but it goes through there. And that's also why they've got such control over it.
Yeah, and of course it gave them great political influence and power, and they could monitor transactions and things like that. I suppose another way of reflecting that is if we buy oil from Angola, we pay for it in dollars.
Yeah. So, and that's how it affects our everyday life. So most commodities globally are priced in dollars. Oil is probably the most pertinent, and whenever our petrol price is influenced, there will normally be a comment about the rand strengthening or weakening against the dollar, how that influences the petrol price eventually, because oil is priced in dollars. Similarly, gold, it's had a phenomenal run, but that is, it's priced in dollars, and you can go through a whole range of commodities. The base currency is dollars, and as a result, whenever the dollar strengthens or weakens, it will significantly influence, your domestic commodities and the goods you consume. But it's not limited to that. So, most of Africans have probably between 30 and 40% of their assets offshore through their pension. Most asset managers would typically have around 30 to 40% of those assets internationally, and probably at least half of that, would be invested in US dollar denominated assets. So your financial prosperity also depends on, your pension pot also depends in a way on the performance of the dollar. If the dollar would weaken a lot, your pension fund will be affected by that, by those moves.
And that leads us to understanding why 59% of reserves in foreign currency are held in dollars.
Well, that very much is part of the picture. Why foreign reserves is exactly is because that's to facilitate global trade. So whenever a country, and South Africa is a very good example because we haven't naturally got oil. If we want to buy oil from anybody else, we have to pay them in dollars because the commodity is priced in dollars. So we have to keep those reserves on hand. We have to produce goods ourselves in order to sell them, get dollars, in order so that we can exchange those dollars again for oil. And that is true for most countries. So it's always good to have a healthy basket of dollars around so that you can buy whichever commodities you need, which your country doesn't have by itself.
Yeah, and 66% of MSCI weighting in dollars.
That is exactly. So that's still a remarkable statistic. So, for example, the US is by far the largest, 65% of the index. The next biggest country, single country, is Japan, and it's around 5 to 6%. These things change over, quarter by quarter. So your second largest country, doesn't even push into double digits. So financial assets, the vast majority is US-based companies, and as a result, when you make an investment, a sizable portion of that investment, if you just go and buy global equities on a passive basis, 65% of what you're buying will be dollar denominated.
Wow. And that's why the US dollar was the ultimate safe haven asset. Right? Every bad guy you ever see in a movie has got a safe full of dollars. That's
exactly, because it's so easily exchangeable anywhere in the world. There's always somebody that says if you want something in return and you offer him, typically, as you say in the movies, or at least an 80s movie, they will happily take the dollars. I think that might have changed over the last 10 years, but we'll get to that. But why the safe haven asset is because when you're the reserve currency of the world, like the US was, it's the easiest for you to print more dollars. And that's what we saw over the last 15 years, sort of from the great financial crisis. It was very easy for the American state and for the Federal Reserve to create dollars out of thin air and not bear the consequences. If any other country starts increasing their money supply, they will immediately experience inflation in their economy. And we've seen those horror stories from Brazil in the 90s and Germany in the 1920s. That's unavoidable. But the reserve currency has got the luxury of increasing the money supply without necessarily creating inflation.
Which means that when we look at the year to date, because this has been the worst, a really bad year for the US dollar, compare it to some of the other currencies. It's the 7.6% down versus the British pound.
Yes.
11.7% against the euro. And people are talking about the bad European economy, even down 23.6% against the ruble and 2.9% against the renminbi, the Chinese currency, 6% against the yen, the real, even the rand, 7.9%.
I think the rupee is the exception.
The rupee is the exception. Why would that be?
I think why both India and the US as markets were significantly bolstered by technology stocks, and there was a strong correlation between a strong dollar, a strong Nasdaq, and the Indian stock market performance. And this year, with the dollar trade unwinding, that had a knock-on effect into India.
Yeah, and of course the real question mark here has been the strength of the euro.
Yes.
Is that just purely because it's the only, you kind of have these three mega economies, if you want to call it that, the US, China, Europe. But Europe seemed like the sick one of the three. Is that being reevaluated?
So I think it's got less to do with their economy. So what happens in foreign trade is you buy goods, you supply goods to the United States. The United States is the reserve currency. They buy goods from all over the world, and they pay in dollars. So now the Europeans provide all kinds of goods to the US, and they get dollars in return. And then they say, well, instead of converting it back to euros and spending in Europe, you know what? What we'll do is we're going to keep it in the US. We're going to go buy some stocks on the stock market. We see those amazing technology stocks. We're going to buy more of them. And that's actually, we're just going to keep those dollars and invest it into financial assets. And what seems to have changed this year is that for some reason the Europeans, and I think we can get to that, is saying, you know what, I still want to own those companies, but now I no longer want to be exchanged to the rand, to the euro-dollar exchange rate. So previously they believed the dollar would strengthen, and all the signs was there that the dollar would strengthen. And so they were happy to own both the financial asset and have the currency exposure. And I think for a lot of Europe that's changed. They're saying, well, we're still happy with the companies, but we don't like where the country is heading in terms of its debt. And we would actually now rather hedge our bets in terms of the currency.
So against the basket, against all the currencies, the US dollar down over 10% for the year against the other currencies. Quite an astounding performance.
For the dollar, yes. So like we show that there's only 4 calendar years in which it's done worse. The only data we're excluding is the Plaza Accord. So, your older viewers and those that are well read might...
Be careful. Be careful.
We'll remember the Plaza Accord, or you can go and study it when the dollar was too strong in the 1980s. Yes. And everybody had to get together in the Plaza Hotel in New York, and they agreed to weaken the dollar. And so for about 3 years, from 1985 to 1987, you saw 3 consecutive years in which the dollar depreciated materially. But that was a concerted effort. It wasn't a free market arrangement. So the data we've cited is the 4 other years in which the dollar depreciated by more than 10% in the calendar year. And that was market forces. And the main point we're trying to show is that it's actually quite unusual for the dollar to weaken that much over such a short period of time.
And what I picked up about the other 3 years, which was 2002, 2003, or the other 4 of them, 2002 and 3, 1990 and 1978, there were actually sort of like incidents that actually influenced that. In 2002-3 was the start of the Gulf War, just after 9/11. In 1990 was Gulf War I. In 1978 it was, you see, you won't remember this, the Iran crisis, but they were event-driven.
Exactly.
This one has got no event linked to it.
It is the aftermath of the event in which the dollar weakened, meaning it's again that safe haven demand, or that safe haven asset behavior. In the run-up to that event and in the event happening, the dollar would have strengthened a lot over possibly strengthening too much as people rushed towards the safe haven asset. And then that has to unwind. Trade has to stabilize. Ultimately, the price of the currency ultimately relates back to the trade over long periods of time. So all those periods of weakening was related to the currency really returning to its normal rate.
Yeah, I'll now get 1,000 comments, but 1978 wasn't the Iran crisis. That was in 1979. This was the oil crisis with inflation and a whole lot of other issues, but certainly 2025 is kind of self-inflicted. So then we see Donald Trump has been on a mission to pressurize the Federal Reserve to lower interest rates. And finally, Jerome Powell couldn't take it anymore. And quite soon after we record this, or quite soon before we recorded this, he actually did lower interest rates, purely pressure.
I think that might be slightly oversimplifying it. I think what has changed for the Fed and what allowed them to cut interest rates is that the labor market in the US is looking a lot less healthy than it did 2 months ago. All of this relates to the so-called jobs report, is how much jobs the economy actually created. And it's an interesting side note, is that those reports are compiled over a period of time, typically 3 to 4 months. They send out surveys essentially. So when you report your first month worth of numbers, you've only got about a third of the responses. And the Department of Labor in the US, being very smart statisticians, they would make some adjustments and they would try to estimate, well, if we've got a third of the data, what will the actual numbers be in the end? And this is a challenge they have, because they want accurate data, but they're relying on people replying timeously, and sometimes people take 2-3 months to respond to the survey. So what's happened in the last 3 months is that all the previous jobs reports got revised lower. And in some cases where they thought jobs were created, there was actually job losses, yes. So this was, a lot of people will point out to this, that, hold on, the administration has put so much pressure, and it's not just the president. Later on, it became, people across the administration. Scott Bessent, who is a very respected financial market participant, who understands how these things work, and would make comments that is not consistent with the Federal Reserve, or the classical understanding of it. And because, so it's easy to point to the pressure from the administration, but yet the data has changed. The labor market was definitely a lot weaker. And by Jerome Powell's own admission, is that monetary policy in the US is still restrictive. And they are aware of it. They're constantly trying to balance the inflation against the jobs. So when you've got restrictive monetary policy and suddenly your jobs numbers come in a lot worse, I think what he said last night, and please don't hold me to it, but he was saying we're moving towards a more balanced position, because we now see more risk to the jobs and a lot less risk to the inflation.
And just before we move off that particular topic, how much does it play into the sort of the feeling in the market that the Federal Reserve was independent? And it would, the whole aim of the Federal Reserve is that it's apolitical. It doesn't make decisions based on politics, even though Jerome Powell has now justified what he's done economically. There's that feeling that he's caved into pressure.
That's undeniable. I think humans being humans, the mere fact that the pressure is there, we will deduce that somebody caved towards the pressure. And ultimately it is, unless you really believe that it can be truly objective, you will have some lingering thought at least, but there must be something at the back of his mind that says they need to change something if there's that amount of pressure. So I think that there is still a strong perception that the Federal Reserve is independent. However, it is definitely being undermined, and that is not good.
The craziest graph, and that is that if you had have asked anybody in 2018 what the graph of the rand dollar would look like, or especially from 2022, you wouldn't have had this in mind, where in the last 3 years the rand has been stable against the dollar.
I always enjoy talking about the rand because it's such a volatile currency, and as a result, you get very unexpected. You get levels where the currency is trading against the dollar that you would not expect. And I think, as you pointed out, in 2022, if you ask any South African, would you rather own rands or dollars for the next 3 years? I think 9 out of 10 people, if not more, would have said, I would take the dollars. We had load shedding at that stage. We had political uncertainty. The elections were still coming up around the periods. And if you maybe squint a bit on that graph, you'll see the spikes, where the stage 6 load shedding was, where the election was. So it wasn't without turmoil. But for the rand to be largely unchanged over the period, And then you factor in that we've got much better interest rates, higher interest rates in South Africa than in the US, about 3 to 4% higher over the period. If you hold on to your rands, they would have grown by about 25%. If you held on to your dollars, they would only have grown by about 17%, about 4% per annum. And so you're actually better off in rands. And that's a big surprise given what's happened. And I think, again, this points out to the dramatic effect a weaker dollar has. Often, as South Africans, we think the rand, it's going bad in a country, the rand should be weak. But and that definitely does happen. I still remember, the rand trading very, very close to 20 against the dollar when we hit stage 6 load shedding. But that's often temporary as things resolve, and then many times the rand weakens or strengthens based purely on what the dollar does. And this is another good example of it, is the rand is largely unchanged against the dollar because the dollar has weakened so much over the past 12 months.
And of course, currency and trading currencies and analyzing currencies, it sets itself up for that perfect question of compared to what.
Exactly.
Because it's not just the rand or what's going on in South Africa, it's the rand compared to the US and what's going on there, and that has got many other factors in it. So sometimes South Africans, we don't look at the other side of the story to see what's going on in other places. So then we've got, you've shown us some fact that we do have some competing currencies. Now, I find it quite strange because one of Donald Trump's big things was to try and shut down any conversation of, creating other reserve currencies or other trading currencies. And he came down really hard on BRICS and things like that. But in many ways, he's been the best advert for other currencies, hasn't he?
Well, essentially, yes, because he's attacking his Federal Reserve. He wants the dollar to weaken, but he obviously needs it to remain the reserve currency of the world. So any challenge to the dollar as the reserve currency will be resisted by the US. It's in their self-interest to do that. We've made a lot of jokes about dollars in suitcases, and I think that very, very much was the case 30, 40 years ago, if you wanted to do something nefarious. But technology has changed that. We've now got the cryptocurrencies, which is allegedly being used also for nefarious purposes because it can so easily be transferred across borders. So one important use case for dollars, at least physical dollars, 40 years ago, has changed through cryptocurrencies. Now, this should be distinguished from, that's one use case of cryptocurrencies, not in general. People invest them and buy them for various reasons. The overreaching point is there's an alternative. Gold has been an alternative forever and a day. I mean, if you speak to any German, they will still tell you, you always have a gold coin in your safe, because they all sit with that memory of their grandparents from the 1920s hyperinflation. So then yes, as you point out, BRICS, there is real efforts for many countries to try and challenge the dollar and create alternative currencies and even create block currencies like the BRICS as in a way, and ultimately, and I think it points back to this comment that whenever you make a transaction and it's dollar denominated, it will touch a US bank. There will be a record in a US bank of one entity transacting, and I think many entities in many countries are trying to find ways around that. And so what you see is, we've seen a phenomenal rally in the gold price. There's various reasons attributed for that. Some people blame that the world is over indebted, which it is. Some people blame, countries like China, Russia, and India, increasing their reserves, to reduce the reliance on the dollar. None of it is a smoking gun. All of it can be attributed to it. But what you see overall is you see all these different, cryptocurrencies, gold, and countries trying to form, alternatives that offers alternatives to the dollar. And all of those undermine the dollar in some shape or form, whether it's the US president himself or people just actively saying we no longer want to use this, is what we're seeing playing out.
And that is really reflected in the chart of showing the US dollar against a basket.
Yeah, so what we've got over there is a chart that, in order to understand the value of a currency, you have to adjust for inflation. Inflation in the US for the last 20 years, barring the last 3 years, was very low. It was often below 2%, and South Africa was a lot higher. So you have to make that adjustment for inflation. And the chart we've put up there, values the dollar adjusted for inflation. And what one can see is that even though the dollar has weakened a lot this year, it still is, compared on an inflation adjusted basis, it's still very strong. And I think the point we're making is that it's, no matter how important or strong you believe a currency is, it's always good to have a diversification, into your portfolio, or however you do your business. Because as much as the dollar was the king of currencies for definitely for the last 10 years, that dominance doesn't always last. And by no means are we saying that it means it won't no longer be the reserve currency. I think it will, for a number of decades, still be the reserve currency, very likely. But its value could change dramatically over a short period of time. And I think, people in general need to make sure they're not overexposed to those fluctuations.
Yeah. So you, as head of asset allocation, what exactly do you do? Do you lessen your exposure to dollars, adjust it?
So the challenge for us is you want to try and do this beforehand. And you can never know the future, but you can judge when something is expensive or cheap. And it's always a difficult exercise, because something can remain expensive for a long time. Sometimes it's justified, to have an expensive price. But ultimately, what you're trying to do is have a diversified portfolio where you're not only holding dollars, you're holding some euros, you're holding some pounds, you even hold some emerging market currencies. And then the challenge is to adjust that basket proportional to where you believe the value is. So in our case, for our clients, we've still had a significant amount in dollars. All of the foreign assets, nearly half was in dollars, but not nearly that 65%, that you saw on the earlier chart. So we had an underweight to the dollar going into this year. A bit of last year, it definitely hurt us. But fortunately, that's come back and some. And I think that to us, it points out that when it's normally when people get overexcited about something and believe it will go one way, that where you might just want to lighten your portfolio a bit and just make small adjustments in the bigger scheme of things to take some risk off the table and position accordingly.
Now, Simon, I want to just talk about the impending tariffs in the US and the economic impact on the tariffs. How are you viewing it? Because obviously there's been a question mark where Donald Trump said this other countries will pay, which is patently incorrect, because the US consumer will pay what I think where other countries will pay is that they will pay because people from America will buy fewer of their things because they become more expensive. That's kind of the thinking, isn't it? But ultimately, the bill is stuck with the US consumer.
So I don't know. I can't speak for Mr. Trump. It's blatantly false. So yes. Whenever you impose tariffs, you taxing your own citizen in an indirect way. In fact, the challenge from some members of Congress is exactly along those lines: is that the tariffs is a tax, and it's only the House and the Senate. It's only the US Congress as a whole that can impose taxes on the US population. So they're challenging that authority, and that's the latest rounds of what we see now. We've seen a few court cases where that's now been outright challenged. And I mean, you can even find some conversations with some congressmen where they say, we're happy to support some tariffs, but not nearly to the extent to which it's been implemented. And I mean, there is still a lot that has to play out here. So, for example, if the tariffs do get overturned by a court, what does it, what impact will that have? That you could suddenly, billions of revenue that was received by the US Treasury, now that has to get returned in some shape or form. So we're taking a very cautious approach to this. I think when you sit with that much uncertainty, where things can go one way or the other, you want to maintain exposure everywhere, because you never know which one is it that's going to hurt you most.
And if people are uncertain as to how tariff impact the consumer or a country, I think we've got a great example in South Africa with our vehicle industry, don't we? Where
Exactly.
we've got almost like 100% tariff on vehicles that come into the country, and that money is funneled for us to produce cars. That's where the subsidy comes on foreign producers of cars. So we give them the money that comes off the South African consumer to have an inefficient car manufacturing industry in South Africa, but it creates jobs.
So it's, if you use the revenue from tariffs wisely, I mean, there can be great benefits. I mean, 100 years ago, the US only ran on tariffs. That's how they collected their taxes. So, and I still believe that's why they are going down this route, is that they need a different source of income, and because nobody in Congress wants to cut spending. That became clear through Elon Musk's exercise of Doge, which might or might not have been successful in some respects, but not nearly the $1 trillion that they were hoping for. So now you bring it back domestically, it impacts us in two ways. Firstly, is like now suddenly our cars become less competitive in the US, and again, it is not straightforward, because you have to go and compare what's the tariff on, for example, a Korean car or a Chinese car. So like it becomes so complicated, because it's a game, and you have to figure out where you fit into the game. And tariffs and protectionism has been around forever, and sometimes it's justified and sometimes it's needed. But I think what shook markets this year was the extent of it. Nowhere have you ever seen 50% and 100% and 150% tariffs. That's unheard of. It's typically 10 to 20%. And unfortunately, some of the industries locally are feeling it. They're seeing cancelled orders. They're seeing decrease in sales because of this, as once the tariffs now got finalized in August. And that will have real effect on our economy and on our jobs.
Before we leave, you mentioned jobs in your last comment, and that is, we've seen a decimation recently of South African jobs. And it doesn't look good. It just doesn't look like there's areas where we could replace those jobs.
You only got two choices, really. You either have to take those same goods and hopefully export it to another country that is now willing to buy it, or you have to find alternative place for those workers in a different industry. But usually when something so drastic happens, it is very difficult for a business and for an industry to adjust quickly to say we're going to find a different market for it, or we're going to produce a different good. So that will have real lasting impact.
So right now, as we sit here, are you cautious about the future internationally and in South Africa?
So long term, I'm always optimistic about the future. I think humans are amazing. They're ingenious, and they find ways around problems. It's dramatic changes in the short term that we've historically struggled to deal with for obvious reasons. It takes time to build something. It takes time to think about something. So where our concern lies from an investment perspective, and that's really what we can talk about, as Corion, is we're concerned about asset prices in the US. We believe that they are very at stretched valuation levels. Some of the companies are pricing in earnings growth that is not historically been seen. And it doesn't mean it can't happen, but when a large number of companies start exhibiting that behavior, that's when it gets concerning. So as a result, that's why we haven't got a 65% or 70% of the foreign assets in US denominated companies, but rather only about 50%. So that's where is less about necessarily the economy, but about the price you're going to pay for the earnings you're going to receive in those companies. That's where we've got to be concerned.
And South Africa?
South Africa, on the flip side, looks very attractive. So, and it's this jarring picture where the US economy is clearly in a stronger position than the South African economy. But as a result, investors have pushed the stock prices of US companies to levels that are not justified. And because of the pessimism in local companies, our stock prices are well below where they should be. There's an amazing statistic we saw from one of the underlying managers that over the last 10 years, your the earnings growth between the S&P and South African banks were identical. Exactly the same amount of earnings growth. You got a lot more dividends from your South African banks. You hardly got any dividends in the US. But what has changed and why US companies' stocks have performed so well and why our banks have lagged is that, you know, the earnings multiple people were willing to pay for it. In the US, that's increased significantly. They're willing to pay up for future earnings, which we are cautious if that will actually happen. Whereas in South Africa, they're predicting that the earnings will decrease. And then you sit in this bizarre scenario, but they've been predicting this for 10 years. Yeah. And yet our companies continue to find ways around it to grow their earnings, to either cut costs or open up new avenues of business. And that to me was quite interesting. So would you want to buy a solid company in South Africa that's still growing its earnings and you're buying at a low multiple of future earnings that you have to buy, or a US company that, yes, will continue to grow phenomenally, but you're buying at such a high multiple that even the wildest expectations of earnings growth can't justify the price?
Well, ladies and gentlemen, there you go. Corion Capital are, they know how to manage money. If you're considering investment, go to their website. It's corion.co.za. You can get some of the reports. Consider putting some money with them. They help keep us on air, and it's always great to catch up with Simon de Plooy. Simon, thank you so much for everything and sharing your wisdom with us. To everybody out there, visit corion.co.za. Subscribe to the State of the Nation. We'll see you again soon. Thank you very much for joining us.